Hey, good morning, everyone. This is Joe Mendez, and I'm here with Patty Gadd with New American Funding. We are going to talk about, well, first off, this is part of my Morning Cup of Joe series, and decided to get Patty on video live. So we're going to talk about a few things as it relates to the mortgage industry. Patty, I already introduced you, but do you want to say something about yourself?
Yes, Patty Gadd, New American Funding again. And I've been in the business for longer than I like to admit, but 30 plus years. And I've seen all kinds of different markets, up, down, sideways. And we're actually in a pretty even market right now.
So let's talk about that. That's a good segue to the biggest thing that I keep getting and that we get pushback from is interest rates. So tell me about what's happening from interest rates from your point of view.
Well, interest rates are affected by the inflation rate. So as the year goes on, I think the rates are going to improve. But quite honestly, I think interest rates in the sixes are going to be the norm right now between 2023 and 2024.
So oftentimes people talk about, well, yeah, the Feds are gonna increase the rates again. So when the Fed does that, does that really affect the mortgage rates?
Yes, it does. When the Feds, they're looking at maybe just only doing a quarter, which would be great this time, but it does affect the cost of the money. So the interest rates go up a little bit because the cost of the money goes higher.
But what I was getting at though is, don't most mortgage companies already are anticipating the rate hike from the Feds, and therefore they've already kind of implemented their interest rates?
Yes, but they still will increase it because the prime rate goes up because the cost of their money is going to go up. But they do anticipate it and build it into the rate, but they might also just raise it again depending on what the Feds do.
And so from a buyer perspective, how does the interest rates, if they go up, how does that affect a buyer with what they would qualify for?
Well, yes, it definitely could affect their qualification rates depending how much it goes up and what they can qualify initially. If they were qualified at a 3.5% rate, then a 6.5% rate is going to bring them down to a lower sales price.
It's worth mentioning that you shared a flyer with me recently where you pointed to all the interest rates over the last few years. Unfortunately, I don't have the flyer in front of me, but as I recall, one of the years, I want to say it was 1975 or something like that, the rates were like at 9% or something. Does that ring a bell?
Oh, absolutely. And they actually went up to, well, when I first bought my condo, it was 12.875 and they had been 15%. So I was so excited they'd come down. So the rates are kind of relative. When the rates are up, the housing market is a little bit softer price-wise, so you can get a lower price perhaps because things are slower and sellers that need to sell will negotiate more, maybe closing costs, etc. Joe can talk about that, but it's always a good time to buy.
I agree. I think it's always a good time. When I bought my very first place, I had my first place at 8%, and it was a fixed rate, and it went okay for me because the rate never really increased. I think it increased once, but it went up like a half a point or even a quarter of a point. It didn't really make a huge difference on my monthly mortgage. But the nice thing about it is that if you get a rate that you're not happy right now, there's these buy down rates. Can you talk about that a little bit?
Yes, what there are seller buy downs, there's lender buy downs, and then the borrower can buy down the rate. So let's say the interest rate is 6.5 and you like the payment at 4.5. So what can be done is that the buy down is a 2-1 buy down, meaning the first year you start at 4.5, the second year you start at 5.5, and then the third through the 30th year is 6.5 if you don't refinance.
Okay, and that's the key. So the whole reason for the lenders doing these buy down rates is so that it makes it affordable for people to still have a low mortgage payment, correct?
Correct, and they can qualify. Maybe if they don't qualify at the 6.5, they can qualify at the 4.5.
Oh, that's a good point. And so then, again, just to be very clear, so if you do one of these buy down rates, and let's just say that the rates go down significantly, you could still refinance to get a 30-year mortgage at a lower rate. Is that
Right,
correct?
you can always refinance. Years ago, there were some loans had prepayment penalties, but those have all been taken away. So you can, if you buy a house at 6.5 and 6 months later, the rates come down to 4.5, you can refinance your house then.
Okay, good. That's good information to pass along to our buyers, because I know they're very confused sometimes with the interest rates, and automatically they think that they can't, make it happen. And one of the things that I do with Patty as a real estate agent, I always ask her to do these estimates for me. I can do them myself, but my estimates are usually a little off, and so I always send to Patty, what would the mortgage payment be at this price of the home and with this much money down and all that kind of stuff. And again, it's just estimates. They're not true figures, but we try to be as close as we can and try to make our clients as comfortable as they can with whatever the potential mortgage payment will be, right?
Right.
So why don't we talk about credit scores, because that seems to also be an issue for some of the buyers out there.
Well, credit scores, we run the credit and we go to the 3 bureaus. Now, credit scores can vary. You go buy a car and they just run one credit bureau and you can say, oh my God, I have a 780 credit score. We would run your credit and maybe you have a 720 credit score. The reason being is they're like A, B, C, D credit facilities that you get what you pay for, basically. So in mortgages, they have the highest, they pay the highest for the information they get on your credit. They go back years, and then there's algorithms that figure it all out. So if you look at Credit Karma, that'll give you an idea of what your credit score is, but it's probably, when a mortgage company runs it, it's probably going to be lower than what you're seeing on Credit Karma.
And then let's talk about if you run somebody's credit, for example, how does that affect someone's credit score? Like let's say if they're going to 2 other lenders to try to also get qualified, or so they can make a choice.
Yeah, you're not supposed to get an inquiry when you shop with mortgage companies. But if you shop with 10 different ones, then you're going to get your mortgage credit's going to hit, inquiry's going to hit on your credit report.
Okay, cool. All right, so let's move on to, in terms of the buyer, what do they need to get pre-qualified?
Well, to start with, if you're employed, we need 2 years W-2s, a 30-day paycheck stub, and then proof of funds, how you're going to use your down payment funds. So we'll need 2 bank statements, 2 months bank statements. On a self-employed borrower, we'll need 2 years tax returns and bank statements.
And then what about if, like we actually have a client that we're working with now, he has only been working for a little over a year, and he just got out of school, so this is his first job. He has a very good credit score, but he didn't have enough credit, so...
Oh, you did?
He did, because he ended up using other things, right?
No, with a credit score, you usually need 3 lines of credit on your credit report, but he had 1 open line of credit and then 2 closed, so we could count those closed credits.
Okay.
So sometimes if you don't have enough credit, we'll just have you add your cell phone bill on it. We help you do this so you can have 3 lines of credit on your credit report.
Okay, good. And I know that he got qualified, because you did tell me that, so that's great. So one of the things that Patty and I have done in the past, and we actually did a really nice video a few years ago. It's probably 2-3 years ago that we did this, but it is posted on social media and it's on YouTube. It is really a very nice video where we go over basically the same things that we're talking about now. But obviously that video is a little dated because there have been some changes to interest rates and then to the conventional loans limits. So do you want to talk about that a little bit, the limits?
Yeah, the limits have gone up quite a bit. The conforming rate has gone up to 7.75 I don't have the notes in front of me, 725, and then the high balance is over $1 million. So that helps with people being able to use the Fannie Mae, Freddie Mac products to get the best interest rate and the lowest cost on your loans.
And that's why you want to try to use Fannie Mae products, right?
And Freddie, yes, you do, because you get the best rates through using those two big money people.
Okay. All right, cool. And so I just wanted to point out that, again, if you're a first-time buyer, again, you can watch that video on YouTube. You can go to Joe Mendez, search me on YouTube, or you can send me a message, DM, text, whatever, and I can send you a copy of the video. We also, Patty's company, New American Funding, has a digital first-time buyers program or a booklet. And I actually just saw that the other day. It looks pretty good. So once again, if you're looking for information about being a first-time buyer, what are the things you need, that sort of thing, please send me a message and I will be able to send that to you as well. One other thing that I wanted to talk to you about regarding mortgages, or not mortgages, but the pre-approval process. So there's the pre-qualification and then there's the pre-approval. Can we distinguish the difference?
Well, the pre-qualification is just getting the information, and I'll do it and run the credit, and then make sure that the debts are all in line with the income. To get, basically what we like to do is do an approval where we actually get all your information, send it to an underwriter, and we get full underwriting approval. And all you have to do is go find the property. So having the full underwriting approval really helps you in competitive areas, because the seller knows there's not going to be a problem because you're already approved, and that you can close early. So all we would need to do at that point would be get an appraisal. So we could close escrow in 15 days if we had to.
Right. So from a realtor perspective, when I'm representing a buyer, and if it's a competitive market, having a pre-approval makes a big difference because it gives us that competitive edge with other buyers who perhaps are just pre-qualified or haven't even started the financial process to get qualified. So it makes us look better, and like Patty said, we can possibly shorten the time frame in escrow from a 30-day to a 15-day or 17-day, that sort of thing. But basically, we could just remove all of our contingencies a lot sooner and close sooner. So that's the advantage to getting pre-approved. So as we wind up, how does somebody get a hold of you if they wanted to get you to pre-qualify?
Well, you can text me. My phone number is 562-708-1222. So whatever form of communication you like, text, phone calls. Also, my email is Patty, Patty, .gadd@nafinc.com. So it's very easy. I answer my phone all the time. I respond to texts. So I'm really here for you if you have any questions when you're listening to people talk about first-time buyer programs, or coming in with 3% down or 5% down. We have so many different programs to choose from. But if you hear your friends talking about something, just text me and say, hey, Patty, what about this program? What does this program entail? And could I qualify for it?
Yeah, and so Patty and I work together quite often. In fact, I use Patty pretty much exclusively. I don't mind saying that. And we've worked with plenty of buyers and helped them, on their way to finding their first-time home. So, again, you can get a hold of me as well, Joe Mendez. I'm all over social media. Once again, you can send me a DM, an IM, a text message. Go to YouTube. You can find on my profile different ways, my phone number, and how to get a hold of me. So, again, if you have any questions at all, please feel free to get a hold of us, either one of us, and we're here to help and get you on the road to finding a place. And I think that pretty much covers everything we wanted to talk about. So thank you, Patty, for being on here.
Thank
I
you.
appreciate that. And that's it for now.
Thank you.
Bye.